Hi, David. We're back again for our 6th-month MLS market update in 2014. You know, after the first quarter, we said there was reason for optimism given such extremely favorable mortgage rates and a real healthy supply of MLS listings to choose from. Do you believe our contention was well-founded?
No question, Peter. Our second quarter MLS activity held true to form and kept us on track for last year's pace. After 6 months, Winnipeg Realtors finds itself slightly ahead over the sales of 2013 and up a little bit over the 10-year average at 1%. June sales of over 1,500 were even with 2011, which was, I think, our third best on record. Sales are only short 3% of June transactions in 2007 and 2008. June MLS dollar volume is nearly $416 million, only second to last month's dollar volume, highest dollar volume of $438 million. Our 6-month average is the highest on record.
You know, we really are seeing incredible dollar volume, and we seem to raise the bar each year going forward. You know, one thing, I've seen this term called the Goldilocks market. It means it's not too hot, not too cold, just right. And how do you see that in terms of Winnipeg's local market right now?
I think you're right, Peter. Winnipeg's in a sweet spot right now. The increase in listings every month offer buyers more selection. As a result, price increases are very modest in residential and condominium markets. The first 6 months, condominium listings were up 33%, which translated into 11% more in sales. And in June alone, condos were up 22%. New projects has helped driving this, and many of those new projects are on the MLS and enjoying that success.
Sounds great. What about single-family homes?
Not to the same extent. Listings are up 12%, and we're still ahead of last year's 6-month mark at around 2%. Listing spikes are fairly wide, not only in the city, but also in the rural municipalities.
And what about other MLS property types that we don't usually talk about that much?
Well, multifamily sales were up basically in the same sort of range, percentage range also. On the other hand, vacant land was disappointing. It was down around 33%. And I think that has to do with the large amount of inventory that's in the marketplace right now. Buyers have more choices, and they may not be opting for building a new home.
What's next, looking into the third quarter and looking ahead to the rest of the year?
Well, we feel a little bit like Canadian Eugenie Bouchard in her quest for Wimbledon. It doesn't get any easier as we go forward. Back in 2013, we said that it was a July nobody could deny. So we're close to July's sales were close to 1,400, which has only been reached in one other month, back in 2008. We remain positive, and the delayed spring market, we should carry over as we did last year and see a rebuild in the summer. The dog days of summer are gone, and July and August, while not as robust as May and June, can rival April and outsell other calendar months.
Thanks, David, for the MLS market update for the first half of 2014. Don't hesitate to call, email, or text your realtor if you have any questions on the local MLS market. Have a great summer.